Hello, welcome to All About Stocks. Today we're going to go over Main Street Capital and Stag Industries. That's going to be Main and Stag. They're both RET in the fact that they pay monthly dividends. So currently I have Main pulled up, or Stag pulled up on the yellow. I may go ahead and color Main in the yellow also. So we'll start with Main. Uh, Maine does pay out a 20 cent and kind of a 0.5, if you will, monthly dividend, and Stag pays out a 12-cent dividend monthly. And for the rest of this, I'm just going to start with Maine, follow up with Stag, and then we can kind of go over and compare the two briefly. So Maine is at for their current assets, 3 mil, and their liabilities are at 1.3 mil. Their current ratios look pretty good at 2.25. Total shareholder equities, they're in the positive. For a RET, that's kind of what you want to see. You want to make sure they're not in a negative territory. Debt to equities, a little low, but once again, as I've said, I just want to, I mainly look to make sure that that's not a negative number or getting close to a negative number. That's what I look for. Net income, it is bringing in a good amount of money there. The shareholder equity, you are bringing in money. And return on equity is 5.54. Current share price is 42.01. I looked at this about 3-4 months ago, and I think they were about $35, and that's back in May. And I believe in April they're at 29, I believe. So this year they've jumped drastically. They're doing great. They're just on share price alone. That's what I'm referring to as doing great. Uh, that doesn't mean they're going to continue to do great. I'm just referring to what I've seen. Now, as far as the shares, they have a 68.5. So, and I do try something I do want to refer to the fact is I try not to state my opinion on any share or any stocks or anything. I just come in, I give numbers and try to do research for y'all. That way, y'all can go in and say, hey, I have research done. That way, y'all see all the math I do, y'all see all the numbers I do. A lot of people who are investing, they don't have time to go through, do all the math, all the research, or anything else. So I'm just trying to make it a little easier for anyone who wants to do the research before doing investing. So just trying to help out. Now, I couldn't find any preferred shares for Maine. Their total revenue, uh, that's 69.6 mil. So, and these are in the thousands, so it's even higher than that. That's pretty good right there. And they're estimating a low number coming. This is a low number for estimations, so there's higher numbers, in fact, on that. And this is all what I'm trying to get worked out. And I've said this in just about every video. I'm still trying to get my numbers to match up, so I'm having trouble with that. The outstanding shares current to price, 2.8. and that's for the peg ratio. So this number really doesn't have an effect unless you're trying to look for the peg. So at least I haven't had a reason for it yet, so I wouldn't be too worried about that. Once again, this is a RET for debt and equity. I'm going to pull back for Stag now. Once again, Stag's dividend, that's 12 cents. Their current assets is 156,000. Their liabilities is 369. So this is gonna you're gonna see a whole different side here for Stag. Now Stag, and this is a great comparison here. They're upside down for their current ratio, so that's something to kind of look out for. And the total shareholder equity, they're negative, so that's something to kind of be concerned about. Shareholder equity ratio, once again, they're negative. So you got two negative numbers. You got your third negative number right there, debt to equity. So this is what I would start being concerned about, especially in REITs. The net income, they did pull out a positive number here, and I don't understand where that positive number came from. So if you're negative, if your total liabilities are higher than your total assets, I personally don't understand how you come up with a positive negative income. However, okay, they did. So that's just me. So return on equity is negative 15%. Once again, for me personally, these are things that would make me kind of question a company. And me personally, I like Stag. I've been watching them for a while. The current share price, I believe, is at 42.50 about a week ago. So it has been falling. So shares, they did increase their shares. So that's another thing to be aware of. So total revenue, they have 138. Couldn't find any preferred dividends or preferred shares. Sorry. So this is the uh, estimated low revenue for the upcoming quarter. And they're a real estate company. I don't see how they're losing money in the past few quarters. Real estate's just been going crazy. So either they're buying real estate and selling it with a loss, or I just don't understand how they can be losing money. So if you're gonna invest in it in Stag, you gotta find out how they're losing money. So hopefully you found something out interesting. Please like, subscribe, shoot me a comment if you'd like to see more, or if you have any input. Please make sure to send me a comment. Thank you for watching. Have a great day.